The United Kingdom has lifted its long-standing ban on retail investment in crypto-linked securities, signaling a significant shift in the nation's approach to digital assets and financial innovation. Now, for the first time, everyday investors across the UK can access a range of regulated crypto-linked securities, which were previously reserved for institutional players and professional traders. This marks a pivotal moment for the UK's financial landscape, opening up new and exciting investment opportunities for the general public. It's a move that could democratize access to emerging technologies and financial products, allowing more people to participate in the rapidly evolving world of digital finance. Previously, only seasoned professionals and high-net-worth individuals could engage with these innovative products. Now, ordinary investors, whether they're trading from home or learning about crypto for the first time, can participate in this dynamic market. The government's decision is part of a broader strategy to position the UK as a progressive, forward-thinking financial hub. By embracing digital assets, the UK aims to attract both domestic and international investors, fostering growth and innovation in its financial sector. Regulators have carefully weighed the potential benefits of increased market participation against the risks of exposing retail investors to the volatility and complexity of crypto-linked products. They have introduced new guidelines and oversight to help protect investors while still encouraging innovation. The decision reflects a delicate balance between fostering technological advancement and ensuring robust investor protection. Authorities are keen to support innovation, but not at the expense of consumer safety. As retail investors enter this new and potentially rewarding landscape, it's more important than ever that they are equipped with the knowledge and resources to make informed decisions. Education and awareness will be key as the UK charts a new course in the world of digital finance. To truly understand the recent changes in the UK's approach to crypto-linked securities, it's important to first explore the origins of the ban and the motivations behind it. The story begins with a period of rapid growth and excitement in the cryptocurrency market, which attracted a wave of new investors, many of whom were retail participants with limited experience in complex financial products. In 2021, the Financial Conduct Authority, or FCA, stepped in to introduce a ban on the sale of crypto-linked securities to retail investors. The FCA is the UK's main financial regulator, responsible for protecting consumers and maintaining the integrity of the financial system. Their decision was not made lightly, but was driven by mounting concerns over the risks these products pose to everyday investors. At the time, the crypto markets were experiencing extreme volatility. Prices of digital assets could swing wildly within hours, and many investors found themselves facing significant losses. The unpredictable nature of these markets made it difficult for inexperienced investors to make informed decisions, increasing the likelihood of financial harm. The FCA viewed crypto-linked securities as highly complex and difficult to understand, especially for those without a background in finance. The regulator believed that the risks far outweighed the potential benefits for retail investors, leading to the decision to prohibit these products from being marketed or sold to the general public. Many retail investors were lured by the promise of high returns, often without fully grasping the underlying risks. This lack of understanding left them vulnerable to significant financial losses and, in some cases, outright fraud. News stories of scams and failed investments became increasingly common, fueling public concern and regulatory action. The primary goal of the ban was to shield retail investors from products that could destabilize their finances and erode trust in the broader financial system. By restricting access, the FCA hoped to prevent further losses and protect consumers from the dangers of a rapidly evolving and often misunderstood market. However, not everyone agreed with the FCA's approach. Critics argued that the ban was too restrictive, stifling innovation within the UK's burgeoning fintech sector, and limiting the choices available to consumers who wanted to participate in the digital asset revolution. Some believed that with better education and safeguards, retail investors could be empowered rather than excluded. Meanwhile, as other global markets began to adapt and introduce their own frameworks for crypto regulation, the UK faced increasing pressure to revisit its stance. International competition and the rapid pace of technological change made it clear that a one-size-fits-all approach might not be sustainable in the long run. Today, the decision to lift the ban signals a recognition that the market has matured. Retail investors are now more informed, and the tools available for managing risk have improved. This shift reflects a broader understanding that regulation must evolve alongside technology and investor sophistication. Ultimately, the evolution of the UK's regulatory approach highlights the ongoing need for balance, protecting consumers while fostering innovation and adapting to the ever-changing landscape of financial technology. With the recent lifting of the ban on certain crypto-linked securities, the UK financial landscape is entering a new era of opportunity and innovation. UK retail investors now have the ability to access a broader and more diverse range of investment products than ever before, opening doors to new strategies and asset classes. Among the newly accessible products are exchange-traded notes, or ETNs, which are financial instruments designed to track the performance of specific digital assets such as popular cryptocurrencies like Bitcoin and Ethereum. In addition, certain derivatives tied to cryptocurrencies are now available, allowing investors to speculate on price movements or hedge their existing positions in the digital asset market. ETNs offer a way to gain exposure to the value of digital assets without the need to directly own or store the underlying cryptocurrencies, making them a convenient option for those seeking indirect participation. Retail investors can also engage with cryptocurrency futures contracts, which allow them to speculate on the future price of digital currencies or manage risk in their portfolios. However, it's important to note that not all crypto-related products are accessible. High-risk and highly leveraged derivatives remain off-limits to protect less experienced investors from excessive risk and potential losses. This selective approach by regulators aims to strike a balance between fostering financial innovation and ensuring robust investor protection, creating a safer environment for market participants. As a result, investors now have more tools to diversify their portfolios and explore new opportunities, but they must also take the time to understand the complexity, volatility, and risks associated with these products. The move marks a significant step toward democratizing access to digital markets, challenging traditional investment norms, and encouraging broader participation in the evolving financial ecosystem. As these products become more widely available, staying informed, seeking professional advice, and understanding the risks will be crucial for anyone looking to navigate this dynamic and rapidly changing market. The Financial Conduct Authority, or FCA, is central to regulating the UK's financial markets. As the body behind lifting the ban, the FCA aims to protect consumers while supporting innovation. The FCA's decision followed a thorough risk-benefit assessment. New guidelines require issuers to provide clear, accurate information to investors. The FCA has also launched educational initiatives to boost investor awareness. This approach reflects a broader trend of adapting regulation to technological change. The FCA's oversight will be key as retail investors navigate this evolving market. The lifting of the ban brings both opportunities and challenges for UK retail investors. Investors can now diversify into digital assets, potentially enhancing returns. However, crypto's volatility means investments can swing dramatically. Retail investors must approach these products with caution and a solid understanding of the risks. Financial literacy is essential. Education and professional advice are highly recommended. The responsibility now lies with investors to conduct due diligence and manage risk. While the possibilities are exciting, prudent decision-making is more important than ever. The UK's move contrasts with other major financial centers like the US and EU. In the US, crypto regulation is fragmented, with agencies like the SEC cautious about approving crypto products. The EU, meanwhile, has introduced MyCA, a unified framework for digital asset regulation. The UK's approach aligns with the EU's push for innovation, though regulatory details differ. These differences highlight varying global attitudes toward crypto adoption. As regulations evolve, investors must consider how regional rules impact their strategies. Understanding these distinctions is key for anyone investing in global crypto markets. The UK's decision to lift the ban marks a major shift in the financial landscape. New opportunities in crypto are now open, but so are new risks. Investors must stay vigilant, conduct thorough research, and understand the products they choose. Educational resources and professional advice are invaluable tools. As regulations and markets evolve, staying informed is essential. Approach the crypto market with caution and continuous learning. Smart, Informed investing is the best path to success in this dynamic environment. If you found this video helpful, don't forget to share it, subscribe to our channel, and hit the notification bell so you never miss an update.